Thank you very much for that introduction, and also thanks for partnering CII for this very special event. Honorable Finance Minister of India, Mr. Pranab Mukherjee, Mrs. Nirupama Rao, our Ambassador to the United States, distinguished members with the delegation of the Finance Minister, and ladies and gentlemen. It's great to be here. It's great to be here for CII, the Confederation, in this institution, an institution that we really value in terms of our partnership, which has been growing over several years. And for this very special event with our Finance Minister, we couldn't have had a more appropriate partner today. We have been working in several areas, be it the Private Sector Advisory Group on the Trade Policy Forum and several other initiatives, and really working on this particular event. When we hear our Finance Minister today, this evening, we hope to deepen our linkage in the business front and, of course, more importantly, on the track to diplomacy. You know, it was just a few weeks back that we had our Finance Minister presenting the Union Budget in India for the Indian fiscal year of April-March 2012-2013. And when he presented his budget in one of his opening remarks, he talked about the previous year being that of interrupted development, interrupted growth. And just a few days back, earlier this week, on Tuesday, we had the honor and privilege of having the Finance Minister, which he always very gracefully does, come to the CII's annual session, which was on Tuesday. And he said, and I quote, "Let the year of uninterrupted development be a story of the past, and let us move on the story of turning around this year." And it was just half an hour after he spoke at the CII's annual session, we saw the Reserve Bank of India, the Federal Bank in India, cut interest rates of almost after 2 years by 50 basis points. And I must say that as we left the hall, and as the Finance Minister left the hall, we have seen and he left that evening for the United States. And since then, till today, we have seen a sort of mood coming back into India. We've seen an issue which has been of very critical importance to us, and that is sentiments and the mood that we have kept talking about, lot influenced by, of course, the global happenings, been addressed to an extent. And we have seen again a lot of hope, lot of positivity, which really came around. For us in India, it's really a challenge, and indeed, just after the session, as I mentioned on Tuesday, CII started its new year too. And we give in our theme for this year is getting growth back through reforms and through governance and through a business and industry and a government partnership. And that's really the key that we see in India that emerges as to how the business, the industry can work with the government in partnership in getting growth back for the simple reason that it's become extremely important for us, because if we don't have growth, and we have got used to staying at a growth rate of about 8.5 to 9% plus. Just going back a few years, 2008, we saw this Finance Minister later really taking us away from what could have been a major crisis in India, an economic crisis. We averted it. We saw it in the back of a huge global challenge. We saw very tactical measures without really hurting the finances of the country, so to say. He was measured in the type of the way he really helped the Indian industry that time to come out of a deep downturn that it was expected to go through. And I think with his excise duty cut, so to say, at that point in time, and various other measures that he took very, very diligently in seeing as to how he could really infuse back the momentum, the growth into the Indian economy. So it is with that expectation that we have been turning to him once again to see in the background of what's happening globally, how we can work together, how industry can work together with him, how we could see to it that we are able to really come out of a growth cycle, which, as you know, was 6.9 last year. We are expecting a 7.6% growth. But in India, as I said, we need to move ahead with a much stronger growth rate. We need it for the situation as it is in India, with about 10 to 12 million people who would look for livelihoods every year, year on year, with the type of inclusivity which is required, with the type of the number of poor that we still have in the country. We need the growth. We need that growth, not only just for sentiments, for India to again really see how it can have the rest of the world included in its growth, growth story, as Indian growth story is one of the most benign growth stories of the world, which can be so inclusive, taking the rest of the world as we grow along. So it could be no other person better from India who could really talk at an institute of this kind, which can really give answers to the questions that you have on the economic story of India, on the political story of India, on the growth story of India, a person who has actually been leading all of us from the front. With that, it's, ladies and gentlemen, may I have the pleasure and honor of presenting to you the Finance Minister of India, Shri Pranab Mukherjee.
Good evening. At the very outset, let me tender my apology to all of you for my delayed arrival and causing inconvenience to you. Mr. Fred Bergstein, Director, Peterson Institute, Ambassador Nirupama Rao, Mr. Chandrajit Banerjee, Director General CII, Mr. Arvind Subramanian, distinguished guests, ladies and gentlemen. It's a pleasure to join you at the Peterson Institute of International Economics. This is a preeminent non-partisan think tank that has made a mark in the area of international economic analysis. Your eclectic and pragmatic thinking has contributed to a better understanding of global economic developments and, more importantly, in evolving appropriate policy response. I'm indeed happy to have this opportunity to share some thoughts with you. I would like to thank Mr. Bergstein and the Director General CII for inviting me to speak before this distinguished audience. India's engagement with the world has increased considerably over the past 2 decades. This has been reflected not just in the economic arena, but in various walks of life like art and culture, literature, and including cuisine, the popularity of which can be gauged from the crowds that throng Indian restaurants in many parts of the world. However, though I would like to hold forth on Indian culture and cuisines, the focus of my address today is on economic issues, the short and the medium-term prospects of India in a globalized world. Let me start with the global prospects and challenges. There have been repeated economic crises since 2007. It is different from the earlier bouts in that it started in the advanced economies, spreading through the financial markets to the other parts of the world, and has now turned into sovereign debt crises in some of these economies. Initially, there were problems in the United States economy and in some specific countries like Iceland. These become more generalized, affecting several European countries such as Greece, Ireland, and Portugal, and threatening many others in the EU zone. There are other nations that may not face the risk of immediate fallout, but where stagnation is evident. Japan, for instance, grew at negative rates for the better part of 2011. When a crisis occurs, each country has a tendency to treat the event as a special problem and administer appropriate policies, sometimes without regard to the consequences those actions may have in other parts of an increasingly globalized world. But the occurrence of repeated crises should alert us to the possibility that there is perhaps something more structural also happening today. I believe, and I am not alone in this, that there is a structural change ongoing in the world. The crises that we see all around are manifestations of this common structural change, namely the rise of emerging economies all over the world, but especially in Asia. The huge resource of human capital in countries like China, India, Indonesia, the Philippines, Thailand, Malaysia, and other nations which earlier could not join the global workforce are now a part of the world because of new technology. Whether a skilled person happens to be in New Delhi, Bangkok, or Manila, by use of modern technology, a person's skill can be put to use in New York, London, or Tokyo. It is this that is changing the world. To gain from this change, the advanced countries have to work harder in trading their skill and knowledge base with Asia and the emerging economies. Indeed, there remains enormous potential, but it has to be brought about by policies that help those economies to remain open to trade and doing what is sustainable in the long run, including shifting to higher savings and investment rates. The rise of the emerging economies is evident. Roughly 15 years ago, emerging and developing economies accounted for 35.5% of the total world output. They now account for almost 50% of the total world output. Such a big shift in less than 2 decades has rarely been witnessed in the world. This rapid change has also been accompanied by a gradual shift in global economic power from the developed to the emerging and developing countries. Indeed, we are witnessing an emerging new world order where there is higher degree of interdependence among nations, and hopefully there is also a more dynamic and equitable arrangement for global prosperity. I would go a step forward and like to suggest that such an arrangement for global policy making and governance is vital for the well-being and progress of this critical juncture in the history of our world. Just as the rise of Europe and North America, and subsequently Japan, was a great human achievement, so is it going to be with the rise of Asia. Far from taking away anything from the rest of the world, the emergence of Asia and other emerging market economies brings a renewed momentum into the global economy. But this process is not going to be automatic. Individually and collectively, we need to build out on this momentum as we put together our thinking and policy response to address the current uncertainty in the global economy. While engineering a rapid and durable recovery in the developed world, we need to strengthen the new potential growth drivers of the global economy. Ladies and gentlemen, let me now turn to the problem in Europe. The world economy is presently passing through turbulent times. The lingering after effects of the global financial crisis have of late become more pronounced. Over the past months, deep and widespread economic concerns with a complex mix of real and financial problems have surfaced in Europe. The incremental nature of the sovereign debt crisis in Eurozone, with events including sovereign and bank rating downgrades and the risk on-off strategies of international investors, have led to a significant rise in overall macroeconomic risks that threaten the stability of the global economy. The high fiscal deficit and unsustainable public debt levels in advanced countries continue to limit the ability of the policymakers to respond. Growth would continue to slow because the emphasis is on fiscal correction and lowering public debt. Greater emphasis on reducing public expenditure and raising taxes in Eurozone economies would pull Eurozone growth further down. There are other factors that seem to be dampening the underlying growth momentum in the euro area. They include moderated global demand growth, weak business and consumer confidence in the euro areas, as well as the proceeds of balance sheet adjustment in the financial and non-financial sectors. Given the depth of the crisis in Europe and heterogeneity of factors that have led to it, achieving a political consensus on its resolutions seems particularly challenging. While measures including the announcement of the European Central Bank to extend loans to banks up to 3 years have calmed markets for the time being, a decisive resolution to Eurozone crisis will require greater coordination and policy consensus and has to be the immediate priority. Ladies and gentlemen, I now turn to India. As the Indian economy gets increasingly integrated into the global economy, it too cannot escape developments abroad, notwithstanding its relative resilience. The unfolding of the Eurozone crisis has already impacted the economy through lower growth, falling business sentiments, declining capital inflows, and exchange rate and stock market volatility with attendant implications of investor confidence. Moreover, the slowdown in external demand has led to deceleration in the growth of exports in the recent months, leading to widening of the current account deficit. India's gross domestic product is estimated to have grown at just under 7% in 2011-12, precisely 6.9. After the crisis impacted slowdown year of 2008-9, India succeeded in engineering a rapid recovery with GDP growth of 8.4% per annum in 2009-10 and 2010-11. However, for the better part of this period, we have also been grappling with near double-digit headline inflation and with high food and commodity prices. Along with adverse global economic developments and weak business sentiments, it hindered the consolidation of our growth recovery. Our monetary and fiscal policy response during this period has been therefore geared towards stemming the domestic inflationary pressure. A tight monetary policy impacted investment and consumption growth through higher cost of credit. The fiscal policy had to absorb expanded outlays on subsidies and some duty reduction to moderate the pass-through of higher fuel prices to consumers at a time when domestic inflation was already high. As a result, the year 2011-12 saw a moderation in GDP growth and deterioration in fiscal balance. We are now at a juncture when it is inevitable to take some hard decisions, and this has been our approach as I outlined in the proposals of the Union Budget for 2012-13 recently. We have tried to address the short-term challenge of regaining the growth momentum while seeking to capitalize on the opportunities in an otherwise difficult global environment. We have focused on strengthening domestic growth drivers, encouraging private investment to regain its pre-2008 crisis growth momentum, and addressing supply constraints in infrastructure, agriculture, and energy sector. The initiative on improving the employability and opportunities for livelihood has been further strengthened to create more inclusive outcomes in both rural and urban areas. A critical element of this strategy is to implement an ambitious but realistic fiscal consolidation roadmap and leveraging technology to give effect to a quantum improvement in government's expenditure management. The process of fiscal consolidation is expected to help in the moderation of the inflationary pressures, which in the coming months could help maintain a more supportive monetary policy stance for growth. After nearly 2.5 years, the Monetary Authority in India has reversed the policy rates for the first time in its annual policy statement for the fiscal year 2012-13. The growth outlook, which has weakened in these past months, should now improve. It should help in investment revival and contribute to strengthening of business sentiments. While there can be no denying that thanks to the pressures of the coalition democracy, some reform measures had slowed down over the last year. But we have taken several steps in the past months to shore up the short and medium-term growth prospects. This includes a gradual liberalization of the capital market and encouraging capital inflows, including through financial institutional investors, foreign direct investment, and in the area of external commercial borrowing, especially for infrastructure financing. The investment requirements for the infrastructure sector are very large, estimated at about $1 trillion for the period covering India's 12th five-year plan 2012 to 17. And of these, nearly half has to come from the private sector. We have recently enabled a mechanism to enable access to the Indian debt markets through a mechanism of infrastructure debt funds. These are regulated entities which envision sustained long-term interest of the dedicated long horizon investing entities like pension and insurance funds. A major initiative on reforms of both direct and indirect tax regimes is on the policy agenda. The government has also taken measures to improve the credit flows to activities like skill creations, training and education, which help in strengthening the medium to long-term growth prospects of the country. Indian economy is in some ways better placed than many other nations to withstand the fresh round of global economic turmoil. India's resilience results from the fact that bulk of India's GDP is domestic demand driven. India's external commercial borrowing policy has been successful in maintaining external debt at sustainable levels. India's banking sector is robust and our regulatory mechanism is mostly in place. There is unwavering commitment to reforms to further consolidate our economic strength. The GDP growth in 2012-13 is expected to be 7.6% plus minus 0.25, which in the normal course should rise by another percentage point in the fiscal 2013-14. The downside risks of sticky global commodity prices, especially fuel oil, remains and could undermine the anticipated growth recovery. We have shown in the recent past that we have the capacity to grow fast. At the same time, we are stepping up our efforts to create more inclusive outcome for our developing society. Favorable demographics, resilient economic structure, high savings and investment rates with potential for further growth, stable democratic institutions, and continued policy emphasis on improving social and physical infrastructures are factors that can help us in moving forward and even shouldering some of the global responsibilities. Indian enterprises has matured and shown that it has the capacity to compete with the best. Ladies and gentlemen, one of the important attributes of modern India is that we are the world's largest functional democracy. Our democratic structure and a system based on the rule of law are fundamental to India's existence, progress, and our role and place on the international stage. The second major attribute is the success of our economic reforms in sustaining high growth. Initiated in 1991, these reforms have supported the creation of a nearly $2 trillion economy and made India the second fastest growing major economy in the world today. Thirdly, India today is predominantly young country. We have a window of opportunity to reap the benefits of a demographic dividend. It makes it necessary for us to prepare ourselves in terms of building the required infrastructure, physical as well as human capital. At the same time, create opportunities for our people and our goods in the domestic and global economies. The strategic imperative for India in the 21st century flow from these attributes. We are committed to ensuring that the international institutions that are responsible for peace, security, and socio-economic development in which we participate willingly and substantially mirror democratic ethos. We have a constructive engagement with the Bretton Woods institutions, International Monetary Fund, and the World Bank. And our experience in using these financial institutions in our task of nation building extends for over 6 decades. Similarly, in the area of international trade, India has been at the center of the current round of multilateral negotiations under the mandate of the Doha Development Agenda to ensure that the World Trade Organization continues to be relevant in creating an equitable, rule-based international trading system. On climate change finance, India is playing a very active and supportive role. Today, as India participates as a partner in the G20, which has become the main forum for dealing with the international economic issues, our experience has proved very relevant in putting forward our vision to the future orientation of these institutions. We desire to make the most of opportunities that globalization has thrown up through a process of negotiated sustainable liberalization to benefit all within and across the nations. Our strategic global partnership with the United States is truly transformational in nature. We are not only discussing issues such as strategic cooperation, counterterrorism, defense, high technology, civil nuclear and space sector cooperation, but also a broad range of development issues that directly and positively impact our citizens. Ladies and gentlemen, I have touched upon some of the major strategic imperatives and directions for India in the short and medium to long term. Within this broad framework, are the initiatives that we have taken in the past several years, including our policy towards our immediate neighbors. In a century, widely billed as Asia's century, India is moving specially and shortly to secure the imperatives of peace and development of a shared destiny of mankind. Let me conclude by emphasizing that in the context of the prevailing global scenario, it is imperative that we deliberate on policies that impact increased robustness to economic and strategic ties between the developed and developing world and find ways to sustain the momentum towards a fuller recovery of global economy. We need to recall the timely and coordinated action in the G20 member countries that helped in steering the global economy out of the unprecedented economic slowdown, the worst since the Great Depression of 1930s. We must have the sagacity to deal with the current turmoil with similar cooperation and a coordinated policy approach. I like to quote one of the architects of the post-World War economic recovery, President Franklin D. Roosevelt, who said, I quote, "Competition has been shown to be useful up to a certain point and no further, but cooperation, which is the thing we must strive for today, begins where competition leaves off." Thank you, ladies and gentlemen, for the attention.